For years, there's been this giant wall separating the world of crypto from traditional finance, from government, from politics. Well, that wall, it's not just cracking anymore, it's being completely dismantled. Let's dive into what this great convergence is all about. And this quote from BitGet CEO Gracie Chen just nails it. This isn't just about Bitcoin's price swings anymore, not by a long shot. We are talking about a fundamental rewiring of our entire financial system. So that brings us to the central question we're going to tackle in this explainer. What actually happens when this rebellious, kind of niche asset class becomes an inseparable part of the very system it was built to challenge? Okay, first up, let's head over to Wall Street. Because the old guard there, they're not just dipping their toes in crypto anymore. Oh no, they are diving in head first. The key to this whole integration is a concept you have got to know: real-world assets, or RWAs. Just think of it like this. You're creating a digital twin for a real-world stock or a bond that can be traded on a crypto platform 24/7. So here's the crucial part. It means crypto investors can now get exposure to those big blue-chip companies without needing a traditional brokerage account. These platforms are literally building direct bridges between two financial worlds that used to be miles apart. And look, this isn't just some theory for the future. We're talking about iconic stocks, from Tesla and Nvidia to Apple. They are already being traded as tokens on major crypto exchanges. The familiar world of stock tickers is officially merging with the crypto world. But the convergence actually goes way deeper. It's not just crypto trading stocks, it's Wall Street trading crypto companies. We're in the middle of a full-blown gold rush of crypto firms going public. For example, the institutional exchange Bullish had this monster debut on the New York Stock Exchange. And in a total crypto-native flex, its entire $1.1 billion IPO was settled in stablecoins. Now that is a massive signal that the big public markets are craving regulated, institution-ready ways to get a piece of the crypto action. So let's move on to our next section and see how this all connects. Because while Wall Street was getting comfortable, you know who else was paying attention? Washington, D.C. They were getting on-chain. This is a really big deal. I mean, for the first time ever, the U.S. government, specifically the Commerce Department, is putting its official economic data directly onto public blockchains. You really can't get a bigger level of validation for the technology than that. And this isn't some small experiment either. We're talking about core metrics like GDP and the PCE inflation index. They're being fed through Oracle networks like Chainlink and Pyth, which are basically secure data bridges onto huge platforms like Ethereum and Solana. And the stated goal? To make America's economic truth immutable and globally accessible. Wow. This timeline really puts into perspective just how rapid this policy U-turn has been. Just a few years ago, the whole vibe was defined by SEC lawsuits against major exchanges. More recently, the political tone shifted completely, talking about making the U.S. a crypto capital. And that all culminates in official government data being put right on the blockchain. And, according to financial reporting, it's pretty hard to separate this major policy shift from the growing financial interests of some pretty powerful political figures. And to put a number on it, Bloomberg reported that in just a few weeks following that policy shift, ventures tied to the Trump family saw their stated crypto wealth increase by approximately $1.3 billion. Yeah, that's billion with a B. Now, this big crypto embrace in the US isn't happening in a vacuum. Of course not. It's actually setting off a global competition over the very future of money itself. And what we're seeing is a clear geopolitical divide. On one side, you've got the US, which is going for a private sector-led model, empowering regulated companies to issue digital dollars. But on the other side, you have China and the EU, and they are pushing hard for state-controlled central bank digital currencies, or CBDCs. So it's shaping up to be a real contest between government monitoring and market innovation. So, okay, we have this massive global convergence of finance, politics, and technology. But what does it actually mean for you, for your portfolio? Well, for a long, long time, the biggest selling point for crypto was that it was a hedge, that it moved independently from the stock market. That whole idea, it's now officially dead. Crypto is now deeply, deeply tied to the traditional financial system. I mean, this chart demonstrates that connection perfectly. On the left, you've got the Russell 2000, which tracks smaller, high-growth U.S. companies. On the right, the altcoin market. As you can see, their performances are now highly correlated. When one goes up or down, the other tends to follow. The fate of one is now tied to the other. As the analyst blockchain backer put it, hate it or love it, the data tells you your crypto bags are dependent on the broader stock market. The worlds have merged, and so have the risks and the rewards. So where does all of this leave us? We've seen crypto integrate with Wall Street, we've seen it get adopted by Washington, and we've seen it become a major piece in a global geopolitical game. And this brings us to our final critical question. As this once rebellious technology merges with the very system it was designed to disrupt, is it losing its soul? Is it losing its original cypherpunk vision? Or, by becoming an integral part of global finance and governance, is it finally finding its ultimate purpose? That is something to think about.